A very good afternoon to you. This is your daytime update. Let's take a look at how the markets have been performing thus far today. The JSE is muted in midday trade with its global peers mixed. Investors are still digesting the recent spike in COVID-19 infections in some countries. Now, some global stocks have been under pressure so far this week as investors weigh up prospects for an economic recovery. For an update of the latest market developments, we're joined now by Karl Gevers, a portfolio manager as well as co-founder at Benguela Global Fund Managers. A very good afternoon to you. Good to have you with us once again. Perhaps let's start with a global look at how the markets are faring this afternoon.
Yeah, good afternoon, Thami. We've seen some pressure continuing in the global markets. The European markets looking mixed. Asian markets certainly down today. If we look at the Nikkei, down over 2%, the Hang Seng down 1.65%, and then the US futures also looking currently down between 0.5% and 1%. So certainly the mood is a bit cautious, and I think there is a bit of profit taking globally, also in our market. And as you mentioned, there is a bit of risk coming through in terms of global infections, in terms of COVID infections picking up, which could mean some more travel bans and lockdowns potentially looming. I think locally we're obviously still in a slightly better position, but our markets have rallied quite nicely in the first quarter, so I think it is a bit of profit taking taking place at the moment.
Now, gold prices rose in early trade, prices hovering near the 7-week highs. Take us through the developments on that front.
Yeah, I think gold is also quite correlated to economic uncertainty, and I think that's probably what's coming through now. Having in the last sort of 6 months, gold price has come back a bit from its highs, but as you say, in recent days ticked up again. And again, the main reason there is the increased uncertainty, again, with infection rates picking up and potentially lockdowns. And we've seen, especially in India, where there's been high increase in number of infections, so possibly a third wave coming through.
Now, inflation came in at 3.2% in March, year on year, up from 2.9% in February. Help us make sense of this data and what it tells us about consumer spend on a basket of goods and services.
Yeah, so the March number is slightly up on Feb, and it's in line with market forecasts and expectations. The main contributors there have been food and non-alcoholic beverages. They contributed 1% of that increase. Housing, utilities and transport also contributing about 0.5% each. And I think the main driver for the rise in inflation in the last month was, if you look at the food prices in terms of bread and cereals, driven by a commodity price increase. So food producers have had to pass on some of those costs. So it certainly is slightly up from Feb, but it's still quite manageable. And I think, forward looking, there are probably some upward pressures in terms of fuel prices that we've seen quite a steep increase, similar with electricity prices. However, on the other hand, a stronger rand would certainly help curb some of that cost pressure. So, I think no real risk yet of any high inflation coming through.
The BHP Group released its operational review for the 9 months ending the 31st of March. How has the mining group fared?
Yeah, I think also in line with expectations. So for the first quarter, the iron ore division, 2% decline in production on the back of wet weather. However, they are on track, and iron ore is quite a big element of BHP, so they're on track to deliver in terms of their forecast in the upper half of that guidance. Copper guidance also was lifted on the back of a strong Escondida production outcome, and also positive is Olympic Dam, one of their large mines, had one of the strongest production quarters in the last 5 years. So I think overall a pretty decent result. I think for BHP the biggest question, however, is the iron ore price. That it's not really a production issue. It's more about where the iron ore price is going. So that'll be the driver going forward. The stock is down about a third of a percent today.
Now let's focus on the Royal Bafokeng Platinum. They've also just released the quarterly production report. Take us through the numbers there.
Yeah, so Royal Bafokeng Platinum had also a good operational update in terms of production. In the last quarter, so up to March, they did have to contend with the second wave that we saw the end of in January. Also Eskom related load shedding and some regulatory pressures, especially in Styldrift, where they had a landfall in December. So in terms of production, they had an increase in about 22% in terms of tons milled, which is quite positive, and in terms of metal produced, 14.2% up. I think on the one area that's probably a bit worrying is that they had a 6.9% increase in operating cost per ounce. So that's probably an area where there's a bit of concern, but otherwise the market reasonably satisfied. The stock is flat for the day.
Well, Karl, we'll leave it at that for this afternoon. Thank you so much for today's market update. That's Karl Gevers there from Benguela Global Fund Managers.